Hello dear traders, I'm Anna Kasatkina. Welcome to Insta TV. The Canadian economy failed to follow in the footsteps of its American and British counterparts as the country's economic expansion slowed to a standstill in October. Canada's crucial macroeconomic indicators released yesterday, namely core retail sales report and GDP figures for October, remained largely unchanged, pointing to a lack of growth in the economy. The news came as a huge disappointment for financial markets, as economists had predicted positive changes. There was just one Canadian indicator that showed a slight increase yesterday. Retail sales rose less than expected in October as the index edged higher by 0.1% compared to the previous reading. The figures fell short of economists' forecast for a gain of 0.4%. Retail sales reached a seasonally adjusted 43.42 billion Canadian dollars. In October, core retail sales excluding motor vehicles and parts were flat at 32.39 billion Canadian dollars. Experts had predicted a rise of 0.4%. The country's GDP growth rate printed similar results in October. Canada's economic output remained unchanged in October, well below the expectations for a 0.2% increase. Statistics Canada reported a flat reading after a 0.5% decline in September. In spite of the downbeat statistics, the Canadian dollar rebounded from session lows seen earlier and advanced amid rising oil prices. The greenback versus Loonie pair retreated from its highs recorded on Tuesday at 1.3992 and is trading around 1.3860 levels today. On Wednesday, the Canadian dollar's exchange rate was closely correlated to the price of oil rather than another important driver, the difference between US and Canadian bond yields. Meanwhile, oil prices drifted away from the weakest levels and are treading on the recovery path due to an unexpected tumble in crude stockpiles in the United States. The Brent oil benchmark gained 4.8% on the NYMEX, coming in at $37.86 per barrel. Experts believe that the commodity bloc currency is facing a long-term recovery in the light of broad market speculation that oil prices are to stay on the rise in the near future. As for the Canadian economy, GDP growth is expected to remain weak in the first half of 2016. This was Daily Financial News on Insta TV. Thank you and goodbye.